The stock market. Disclaimer: I am not a financial advisor or planner. I am not giving you any investment advice. In this lesson, I am merely pointing out some publicly available information. Let me repeat that. I am not a financial advisor or planner. I am not giving you any investment advice. In this lesson, I am merely pointing out some publicly available information. End of disclaimer. I'm not looking forward to this lesson, as I know that none of you are going to like it. But since I know this information, I feel it's only fair that I share what I know. So here goes. Remember, you're not taught to think this way, so they can make more money from your mistakes. Everyone says that investing in real estate is risky, and it can be. I have lost thousands doing real estate the wrong way. Yet the banks will lend hundreds of thousands of dollars so you can buy real estate. At the same time, banks won't lend a penny for you to invest in stocks. That's because the banks consider stocks to be too risky. So why is everyone's retirement fund on the stock market? Everyone is entitled to an opinion. These are mine. My personal opinion is that the banks are correct. It is also my personal opinion that most stocks are way overpriced. Everyone is entitled to an opinion. Those are mine. Let me show you what I mean when I say stocks are overpriced. First, let me explain the difference between a stock's value and a stock's price. For my example, I'm going to use a plastic drinking cup with a company logo on it. A new cup has an intrinsic value to it. Let's say it's worth $1. But because it has a logo printed on it, the local discount store is selling those cups for $2. And because some people wouldn't be caught dead in a discount store, the upscale store is selling the same cups for $5. People are buying the same cups at both stores. Does this mean that the cup is worth $5? Or is the cup only worth $2? Actually, the cup is still only worth $1. But people are willing to spend more than it's worth just so they can have it. Sometimes both stores will run a sale and sell the cups for 50 cents less. People then flock to the stores to buy cups at a bargain price. But the price is still more than the actual value. This is how the stock market works, and why stock prices can go up and down. Before continuing, we also need a definition for book value. Investopedia defines a stock's book value as: the book value of a company is the net difference between that company's total assets and total liabilities. where book value reflects the total value of a company's assets that shareholders of that company would receive if the company were liquidated. So in simple words, book value is the net worth of the company, and book value per share would be the company's net worth divided by the number of outstanding shares. Therefore, if the company were liquidated, the book value per share is what would be distributed to each share. The bottom line is, what is a share of a company actually worth? Not what is it selling for, but what does the bookkeeping say it's actually worth? Now let's look at a very popular stock that a lot of mutual funds probably invest in. Apple. On the day of this recording, Yahoo.com has a finance page. We need to find Apple. So we type in their symbol. And we see Apple's not having a good day. But this page shows that Apple is currently trading at about $166 a share. Above the graph, there is a little statistics button. And according to Yahoo Finance statistics page, close to the bottom, in the balance sheet section, we have book value per share. And we see that Apple's book value is $3.61 per share. So Apple stock is worth $3.61 per share, and it's selling for $166 per share. This means that Apple stock is trading at a price that is about $160 some odd dollars over its real value. Apple stock price can fall $150 and still be overpriced. Actually, Apple stock can fall 95% and still be overpriced. And many mutual funds invest in Apple stock. These numbers are not my opinion. They are publicly available facts. As of today, August 26, 2020, and it's 12:01 p.m. Central Time. Oops. I have to insert a correction into this video, as apparently I don't know what year it is. I said the year 2020 during the recording of this video, but as you can see by the dividend date in the video, today is really the year 2022. Sorry for that error. Everyone is entitled to an opinion. These are mine. It's my personal opinion that stocks are incredibly risky. Also, it's my personal opinion that now that you know this, you shouldn't be surprised when the stock market does a correction and you lose money. Possibly a lot of money. Everyone is entitled to an opinion. Those are mine. Because I'm not a licensed financial anything, I cannot legally give any investment advice. What I can say is there are other places to invest. You just have to look for them. And sometimes they require you to do some work. I'll also say that if you just want to hand it over to someone else to take care of, then please hire more than one financial advisor or planner. That way you can compare performance and possibly fire an underperforming advisor or planner. Always have at least 2 advisors or planners. Remember, you're not taught to think this way, so they can make more money from your mistakes. Disclaimer repeated here. I'm not a financial advisor or planner. I'm not giving you any investment advice. In this lesson, I am merely pointing out some publicly available information. Let me repeat that. I'm not a financial advisor or planner. I'm not giving you any investment advice. In this lesson, I am merely pointing out some publicly available information. End of disclaimer. And thanks for watching.